Statement of cash flow is divided into three main parts: the operating activities part, investing activities part, and the financing activities part. The operating activities section of the statement of cash flow, the net cash provided or used due to the management decisions during the year. Operating cash flow is the most important metric for investors and creditors, as it reflects the company's ability to generate cash from its business activities. Operating cash flow is always expressed on after-tax basis. Profitable business operations generate net positive cash flow, while unprofitable business activities always consume cash. Operating cash flow excludes any cash related to investing activities or financing activities and only focuses on cash generated from the buying and selling of products. Investing activities section of the statement of cash flow records the acquisition, the buying, the investments of the company, and the disposal of physical and financial assets. If a company makes investments, increases its assets, it spends money. If it sells the existing assets, that will generate cash flow. So this section of investing activities records three things: property, the acquisition of property, plant and equipments, or the dissolution or the creation of business investment, division or section or unit. And finally, investments in debt and equity securities of other companies. And finally, we come to the last part of the statement of cash flow. The last part or the last section of the statement of cash flow is the financing activities section. This section records the cash between the company and its providers of capital, the lenders and the owners. If a company borrows money, it is recorded as cash inflow. When it repays the debt, and interest payments are recorded as cash outflow. If a company declares and pays dividend to its shareholders, that will be considered or recorded as a cash outflow. If the company buys back its shares, that will use cash and it will be shown on the statement of cash flow as a cash outflow. On the contrary, if a company increases its capital by issuing new shares, it will be recorded as a cash inflow. So we have three main parts on the statement of cash flow, and the main objective of these three sections is to help us understand the reasons for the change in the cash and cash equivalents balance that is shown on the balance sheet. It has the operating activities section, investing activities section, and the financing activities section.